Namaste and welcome to our special video on Union Budget 2026. Budget 2026-27 was more growth focused than populist, with supportive policies in heavy manufacturing and emerging sectors such as electronics, semiconductors, biopharma, capital goods, cargo, transport and logistics, and textiles. The government's message is loud and clear. India is looking to position itself as a global manufacturing player. Even as trade tensions rise worldwide, budget outlined a 10% increase in FY27 BE capex, with the capex to GDP ratio set at 3.1%, similar to last year's levels. The government remained committed to fiscal consolidation path and announced moderate capex targeted FY27 BE capex up by over 9% from FY26 BE. From FY27, the government is targeting fiscal deficit at 4.3%. In budget 2026, consumer goods and discretionary shines bright, while infrastructure sees capex miss. Let's break it down. Direct tax wins. Good news for retail investors. Share buyback proceeds will be taxed as capital gains, allowing taxation only on actual profits, often at lower LTCG rates. Promoters face added tax, 22% effective for corporate, 30% non-corporate, curbing arbitrage and boosting governance. F&O speculation targeted with securities, transaction tax STT hikes, futures from 0.02% to 0.05%, 150% jump. Options premium from 0.1% to 0.15%, 50% hike. Exercise of options from 0.125% to 0.15%, 20% hike. TCS rationalized to 2% on liquor, scrap, minerals, tendu leaves, overseas tours. Minimum alternate tax MAT becomes final tax at 14% from April 2026. Prior credits preserved. Fiscal capex pulse. FY26 capex revised down to 10.95 lakh crores, 2% below 11.21 lakh crores BE, a measured pullback. FY27 ramps up 9% to 12.2 lakh crores, aligning with street estimates for steady infra push. Defense allocation surged to 7.85 lakh crores, 15% plus, with capex at 2.19 lakh crores, 22% plus, fueling modernization. Railways gets 2.9 lakh crores for network expansion and freight infrastructure. Sector hits. Consumer goods surge. Travel and tourism ignites with 5 regional medical hubs, partnering private sector for integrated healthcare, education and research. Textile launches 5-pass integrated program. National fiber scheme for self-reliance. Expansion employment scheme. Handloom handicraft support. Tax eco sustainability. Summer 2.0 skilling. Leather footwear gets 12-month export window, duty exemption now covering shoe uppers. Lemon Tree Hotels and Indian Hotels Company among tourism stocks. KPR Mills and Gokaldas Exports among textile stocks. Relaxo Footwear and Bata India among footwear stocks. The full list of positive stocks will be displayed on your screen. Miscellaneous sector hits. Healthcare and pharma boosted by 10,000 crores. Biopharma Shakti for biologic innovation. Nipper expansions, cancer rare drugs duty waivers, caregiver training, metals and mining. Rare earth corridor in Odisha, Kerala, Andhra Pradesh, Tamil Nadu. Rupees 380 crores for the product linked incentives. PLI schemes for specialty steel, critical minerals basic custom duty exemption. TCS on minerals rationalized. Chemicals, 3 dedicated parks, 20,000 crores over 5 years for carbon capture, utilization and storage tech. Cargo logistics, 10,000 crores domestic container scheme, new freight corridors, waterways, coastal movement, for efficiencies. Defense firepower. 63,733 crores aircraft engines, 25,023 crores naval fleet, maintenance, repair and overhaul MRO duty exemptions. IT eased. Safe harbor consolidated at 15.5% for IT services. Threshold to 2,000 crores with auto approvals up to 5 years. Energy. Basic customs duty removed on lithium battery and battery energy storage systems. Capital goods. 17,500 crores. Oil marketing companies grant for domestic LPG under recoveries. The stocks that look positive include Biocon and Sun Pharma amongst pharma healthcare stocks, HAL, BL among defense stocks, GMDC and NMDC amongst metal stocks, and Amar Raja and BPCL among energy stocks. The full list of positive stocks will be displayed on your screen. Sector misses. Infrastructure feels capex shortfall. Revised FY26 at 10.95 lakh crores pressures L&T and capital goods firms. Real estate misses home buyer relief. No hike in loan interest reduction, GST cut or affordable housing cap. Higher borrowing risks, elevated rates. Capital markets stung by F&O STT hikes, moderating trading volumes for broking stocks. Investment calls in the tourism sector, Lemon Tree Hotels, Indian Hotels, Easy Trip Planners. In textiles, KPR Mills, Gokaldas Exports, Wellspun Living. In footwear, Relaxo, Bata, Campus Activewear. In pharma, Biocon, Sun Pharma. In defense, HAL, BEL, Astra Microwave. In metals, GMDC, JSW Steel. In IT, TCS and Infosys. In banking, ICICI Bank, HDFC Bank, REC, PFC. In conclusion, Budget 2026 marks a clear shift from consumption boost to ensuring fiscal and policy stability amid uncertain global waters. This year's budget may have its hits and misses, but to borrow a phrase from the FM speech, the Reform Express is well on its way and will maintain its momentum. Keep your eyes on the numbers and we'll keep bringing you the insights. Thank you so much.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.